Right. You lot look entirely too pleased with yourselves. You're looking at the Kospi up 2.69% right now and thinking you predicted this. You didn't. You just got lucky because the night futures already told us it was going to gap up 3.21%. Yesterday you were sobbing, today you're cheering. This market isn't a playground, it's an abattoir, and if you don't pay attention to the bloody data, you're the livestock. Look at the Yanks. They're having a right laugh. The S&P 500 closed at 6,886.24, up 1.02%. The Nasdaq rose 1.23% to 23,183.74. Meanwhile, yesterday you lot were throwing in the towel because the KOSP dropped 0.86% to 5,808.62. Stop whinging about the time difference. The US market rallied on back-channel talks with Iran, and that sentiment just hit our shores with a delay. The spots where you panicked and sold yesterday, that was the perfect place to buy. You see a headline about the Strait of Hormuz, and you wet your pants. Yes, WTI crude spiked 2.60% to $99.08 a barrel. But if you'd bothered to read past the front page, you'd know the US military is only blocking unapproved or Iranian ships. They're not blowing up the ocean. American and Iranian delegates are holding back-channel talks in Pakistan right now. There's even chatter about extending a ceasefire for 45 to 60 days. The US 10-year Treasury yield actually dropped 2.4 basis points to 4.29%. The bond market is pricing in a deal, not a bloody world war. Everyone's banging on about AI like it's magic, but you're missing the obvious. It requires physical hardware and massive amounts of power. Oracle just shot up 12.69% after unveiling an AI platform for the utility sector. Over here, LS Electric just secured a $170 billion deal to supply switchboards to Amazon's AWS. It's about power grids and infrastructure, you muppets. Speaking of chips, look at the heavyweight bout. Yesterday, Samsung Electronics dropped 2.43% to 201,001. Meanwhile, SK Hynix rose 1.27% to 1,040,001. Why? Because SK Hynix and SanDisk are teaming up to build high-bandwidth flash infrastructure. But don't count Samsung out just yet. They're hiking their 4nm foundry logic die prices by up to 50% to turn a profit. The Philadelphia Semiconductor Index was up 1.68% by the way, with Intel rising 4.49%. Stop treating all tech stocks like they're identical twins. Take your eyes off your own miserable portfolios for a second and look at Japan. Their 10-year government bond yield has hit a 29-year high. The yen is sitting at 159.45 to the dollar. If you don't think an inflation-driven shift in global liquidity is going to affect foreign capital flows in your backyard, you're more deluded than I thought. When the market is stuck in a box, money follows the actual numbers. Korean cosmetics exports for early April looked brilliant, and surprise, surprise, Silicon 2 jumped 9.96%, and Cosmax rose 6.64%. LS Electric surged on its first day of trading after a 5-to-1 stock split. Numbers don't lie. Hope does. Here is the bottom line. If the index tries to break out and make a new high, you stick with the big boys: semiconductors, securities, holding companies, and power equipment. If it stays stuck in a miserable box range, you trade individual stocks based on actual, verifiable earnings. Watch the exchange rate. That dictates what the foreign institutions will do. If keeping track of all this is too much effort for you, cash out now and go buy a pint. I've got better things to do than hold your hands.